All right, how is everyone doing? Good morning, Sri. Hi, Bobby. All right. So what do you want to talk about today? I guess the whole market was like going gaga over Chinese equities. That was the biggest news of the last week. I mean, that I came across. And I was kind of you can say I was half working this week. So might have missed a few stuff. So you can educate us on what else was happening in the markets. Any specific things that have you seen in the market? Sorry, no camera for me today. My tripod, like you guys know, I mentioned last week, we had our birthday party and I had to take my tripod there. Came back very late, maybe kind of a early morning. So we haven't even taken the stuff out of the car. So I don't know which car is the stuff in. So we'll talk about China. I also want to talk a little bit about Meta. A lot of stuff is happening on Meta. Any Meta shareholders? No one knows Meta. Maybe as a part of S&P 500 you own Meta, but anyone own Meta directly as shares? Looks like no. So Meta has been on the tear for this year, almost 64%. Good morning, Yanga. Yeah, we indeed. Yeah, so thank you very much. Thank you very much. We all are a little tired with all that. And when you have an Indian any celebration, you can't have it without a dance. So we were like dancing till early morning. And I was, screaming at the top of my lungs. So maybe I lost a little bit of my voice. So if it sounds raspy, I'll take a few days to recover. So she on Meta. Yeah, so Meta has been on tear almost 64% this year. And they had the Connect 2024, which is Meta's version of a WWDC, where they'll come and share the new updates, platform level updates with the developers, and that team. So I want to talk about that. Want to talk about Chinese equities, and yeah, a few, some of the other stuff. Okay, so let me ask a question on anyone joining here for the first time.
Vivek, this is Satish here. This is first time for me.
Hey, Satish, what brings you here?
Yeah, I'm interested in especially option trading and things like that. Earlier, I used to do, I still do normal trading, but I'm keen towards options trading and want to see how it works for me.
Okay, so I will in this Saturday meeting. I don't get into the details of options unless there are questions around it,
Mm-hmm.
because there is nothing on day-to-day basis anything new to talk about options.
Oh,
So I did cover, and I do it once in a year, the whole boot camp where we get into the details of options, right from the very basics all the
okay.
way to how you manage your portfolio using options. And yeah, that's what I do, is to actively use options to reduce the cost basis. And when I come and talk about, okay, I had to sell this stock or I bought this stock because maybe my put got assigned, or call credit spread
Mm-hmm.
was in the money and things like that. So we talk about it. So if you have any questions, feel free. But I do have a recording of the boot camp on
Mm-hmm.
the website. That
Okay.
will be, if you are completely new to options, maybe
Mm-hmm.
that would be the the first starting point to understand about options.
Oh, okay, cool. So that would be very helpful, Vivek. So if you
So
could put some
yeah, so it's on this. I'll just give you the links.
like, oh, okay, okay.
Also, where we have a beginner, intermediate, and advanced.
Oh, okay.
right? So there are 4 sessions on beginner intro.
Mhm.
This is covered call, then talk about the moneyness and all that. And if you have a small account, how do you grow it? What option strategies are applicable for small accounts? So there are overall 13 sessions. We did it way back. I think we started on March or April. It goes for almost 3 months. Right. Let me share the link here. So yeah, I would say maybe if you're completely new to options, start here. I am not how should I put it that way? I'm not a very active like doing a zero DTE options, or I don't swing for the fences. Options is a tool in my toolbox for
Okay.
my portfolio protection
Mhm.
and to reduce the cost of my ownership of my shares. Right. So that helps me to stay in the markets longer. Right? Anyone can make 50%, 60% in a particular year. I'm looking to make sure that I can stay in this market for next 15, 20, 30 years, even
Mhm.
if that means you have to sacrifice some return, still
Mhm.
okay. Compounding needs, it works better when you give it a longer time
Okay.
and not necessarily the highest percentage return that you can make in a year.
Okay.
Okay. All right. Anyone else? Okay. All other names are familiar. All right. So let's uh, let's get going for today's session then. Okay. So what happened to the markets? Again, stocks it all, new all-time high. Looks like that has become the standard phrase week after week. Um, Again, I think S&P hit a new all-time high. Dow Jones hit a new all-time high. Tech has not yet, though. So go back and look at the tech side. Look at QQQ. QQQ, if I remember, all-time high was around 500 plus. It came pretty close. 493, 494 was the highest one, but then it gave up. I think from overall perspective, I find it better for the markets because now the markets are not dependent on a few of the big winners, heavy hitters, like we were talking about Meta, Microsoft, Google, Amazon. These are and the biggest one of them is the Nvidia. So these are the shares that have um, kept S&P and the QQQ, they carried the most of the load for the performance of these indexes. But good to see that the tech is not yet all-time high, whereas the S&P 500 and Dow Jones index is hitting new all-time high. That means, uh, money is also moving to other sectors other than just tech, which is healthy from an overall market perspective. Um, I s- I still feel it's still concentrated, but what do I know? Markets will do what it'll do. But good to see, markets still made another all-time high. And for this year, what S&P 500 is up for 20%. Even if you have done nothing and just invested in S&P 500, it's up almost 21%. Right? This is the cheapest cheapest and least involved form of investing and the most diversified form of investing. When it comes to just investing in US, of course, you can also diversify by moving outside US to diversify your country specific risk. But when it comes to the US, uh, this is the most diversified US companies. This is the most diversified ETF. And we don't have to go, crazy around trying to pick the bottom, trying to find the best companies, trying to go through whatever Reddit chat rooms and to find the next hot shot, next big tech, the next big thing, the next disruptor. I mean, even if you just pick S&P 500, 21%, and we still have 3 more months to go in this year. This is on top of 26% last year, which is crazy, right? And if someone got scared in October 2022, or markets is not for us, it doesn't work, it is rigged. Now that has caused us almost close to 50% opportunity cost. Just think about it. So it's almost impossible to time the market. I've spoken to people who would try to, and they say, you know what, I am swing trader, which is fine, and I sell it when the stocks go high and buy it when it goes bottom. Who is gonna? My only problem with that strategy is who in the stock market is gonna ring the bell and tell us that, hey, this is at the highest. Right? I have not seen any proven investors doing it consistently. Right? You pick up any great investor, whether from a hedge funds like David Tepper, Stanley Druckenmiller, or from a traditional value investors like Warren Buffett, etc. No one has been able to time the market. So I don't even try it. But the idea is just stay invested, and then you figure out whatever works for you to keep you stay in the market. I found out that options help me to do it. And that was the reason why I started learning about options 8 years ago, that it could help me to stay in the market. My intent was not to hit it out of the park and generate 300% return, which, yeah, if you buy sometime far out of a money call and some stock will go bonkers because someone posted about it, yeah, you may get 200% return. So that happens once in a while. Not my style of investing. So I picked up options because it helps me to stay longer in the market. And we will have, and this is not the first time. 2022 we had a bear market. 2020 we had a flat, kind of a flat. Can we call it a flash crash if it took 3 weeks for the market to go down 30%? Whatever it was, but we had that 2020 COVID, 30% plus drawdown in the market. 2022 markets were down 18%. And if you were in a tech, like I have a lot of tech in my portfolio, QQQ was down like 40%. So it is not an easy ride. So you have to figure out, either be mentally very strong or figure out other ways to stay in the market. So I'm so glad that we didn't sell off, and markets have up 50% since then. Anyway, so new all-time high. Like I was saying, there is a signs of broadening leadership. It's not only that the AI plays or the tech sectors are keeping the overall index high. Leadership is broadening. So we see other defensive sectors also coming up. Utilities is the second best performing sector in the market. Again, that is also kind of driven by AI for now, but QQQ is still not new all-time high, whereas the other indices have, even last week, they made a new all-time high, and even this week, many of them made a new all-time high. So good to see some broadening in the market. Other thing is I was looking at a VIX. VIX is still trading at close to 17, and we have an election coming up in November. My anticipation is, and that's why I'm still waiting for not putting any November trades right now for an option, is, hey, maybe I am expecting volatility to go a bit higher. So if you look at a VIX, but we did tick a little bit higher on Friday, but nowhere, still 16, between 18 and 13 is a normal range of VIX. It is still below its normal range. So I'm hoping and I'm waiting for VIX to pick up so that we can sell some good premium to start building our portfolio options portfolio for the November range. So I'm still holding back. I think I only have one trade that I did for November, and November is still around 50 days out. If you look at November monthly, so October, it's 48 days. So we're getting pretty close to the sweet spot of around 45 days. In normal cases, by this time, I would have started to add, option trades for a November expiry. Just that I'm a little concerned that the VIX will start to go high and those positions will then be going against me. I'm still waiting and holding to see volatility, pick up a little bit. I mean, we are almost in October now, and I find that VIX still sitting at below 16. That's little strange. What do you guys think? Should it be higher? I mean, we still have uncertainty on the election side, right? It's not a clean sweep on either side.
Can you define VIX?
All right, okay. So VIX, it's called as a fear index. It is calculated by using a formula that looks at the option puts and the calls options that are being traded in the market. Now, the reason why I focus on VIX is when the fear is higher in the market, and then if you're selling an options, you get paid much better. It is just like if there is a more chance of nowadays we have a market is pricing in bigger chance of fire in California. Right? And hence, if you go for a fire insurance, you have to pay through your nose because the risk of house being burned in a fire is higher. And when it comes to the stock market, the VIX tells us about the volatility that's being market is anticipating. And when the market is anticipating higher volatility, you'll get paid more if you're selling an options. Right? And so if I'm an option seller, I would want to sell when the VIX or the volatility is higher. Right? And hence I was like, and if I've sold an option and then later on when the VIX goes higher, that goes against my position. So if you look at a VIX, whenever we had a little bit of crash or uncertainty in the market, you will see VIX shooting up. So this happened on the Japanese yen trade, right? The carry trade collapsed in the first week of August. Look at the VIX. It jumped up almost from 23 to 65. Now imagine, I'm not a full-time day trader, so I don't watch the screen every time. But imagine selling a premium at 65 and then next day to collapse back to 26. Right? That was a real quick money out there. And if you go back and look at the history, market doesn't all continuously stay in the state of high entropy. Right? There will be times when the market will be very uncertain and little fearful, and the VIX will spike up and then will come down. So let's pull up last 5 years of worth of data. Now, this was the highest level of VIX that happened during the COVID. We didn't even know during COVID, are we gonna live or not? Will the world ever open up or not? So that was when the VIX spiked from 20 almost to 85. And then once we realized, yeah, it's not that bad, we'll survive. And then VIX gradually start to come down. But all throughout 2021, it was a great time to be a option seller because even though, we realize that world is not going to end, but we still have a lot of uncertainty around supply chain problems, how many doses of whatever vaccinations will you need. Life was not back to normal. So markets were still uncertain. We had this I would say still is a higher level of VIX. Generally, the VIX stays around, like 13 to 18. 2022, Fed start to increase the interest rate, market started to puke. You saw the VIX spiking up. Again, 2022 was even better time to sell a lot of premium. So while the long portfolio, right, your 401k or any long shares that I hold were all challenged in 2022. The reason, at least I was still able to stay in the market, was I had sold a lot of premium in 2022 to basically cushion my losses, right? If I had not sold any of these, and if my loss was 100, those losses were reduced. The paper losses were reduced by at least 40 to 50% because I was able to gather enough premium by selling calls and covered calls and the call spreads while the market was doing what it is doing. So in 2024, yeah, in between during April, we had a spike up. And if you put S&P on it, you will see the reverse way. It will be like kind of a mirror image. When the S&P goes down, you will see the VIX spiking up. And when S&P start to go up, you'll see the VIX going down because then people are less fearful. Election time is a time when markets will be uncertain. So I do expect maybe VIX should rise and then I should wait. Maybe one more week before I start building, my November portfolio. But we'll see. But to me, it looks like, hey, market is not thinking about any risk in the elections. It's like cool. I know in a longer term, I think I have a chart which shows in the long run really doesn't matter who wins. But generally going into the election, you will see VIX spiking up. And then once the election results are out, boom. There is no uncertainty. Then we know who's going to win and the VIX will go down. This is like when we talk about overall market, VIX tells us about the SPY. But there are each of the individual securities, and those who kind of new to this one, each of the individual securities also have you can calculate what's the volatility that's been priced in. And let me give me an example. Let's say pick up Meta because we talked about Meta. And we know that when we have earnings coming up, there's an uncertainty in the market. So let's pick up 3-year one day. Right? Every time and once the earnings are out, markets, you don't have that level of uncertainty remaining in the market in that particular ticker anymore because the earnings is out. We know what the company did in this quarter, what is the guidance for the next quarter, what business segments work, what did not. So as you would see, earnings after earnings, the below chart is showing you the individual implied volatility which is a measure of the volatility of a particular stock. VIX is a measure of implied volatility of S&P 500, but this shows you the implied volatility of an individual stock. After election, boom, this is called volatility crash or volatility crush that happens. Again, same thing. After earnings announcement, volatility crash happened. Stock could go either up or down after earnings announcement. That we don't know. It could go either way. But one thing that will generally always happen 99% of the time is volatility that will always crash. So let me see, for Meta, we had an example where the stock went higher so in this case, the stock went low, volatility crashed. In this case, the stock went higher and the volatility still crashed because now the cat is out of the bag. So market knows whatever it was. In this case, the stock went higher after the earnings, vol crash, This case, the stock was down. This case, the stock was up after earning. You have the vol crash here. New earning stock down, vol crash. This one, stock is, I don't know what happened on this one. Stock is, okay, stock is up, vol crash. So yeah. Now, VIX tell me the implied volatility of S&P 500, which is like our overall market. Now I'm expecting it to start to rise. Number one is elections are coming up. Number two is we also will start to have earnings coming up for individual companies now, right? Their Q3 earnings are due. I mean, in fact, we start to have some of the initial companies start to report. I think Costco reported earnings, BlackBerry had reported earnings. Next week, Nike is a big one, which is reported earnings. So going into the earnings when you don't know what what will happen, what the numbers company gonna report, you will see implied volatility start to rise up. Okay? So, and if you're on options, you can not understand how the implied volatility works, because it determines a big portion of the option premium that either you are selling, which is what I do, or if you're a buyer, which I don't suggest anyone to be a buyer, but you're free to make your own decisions. You must understand how the implied volatility impact the options that you're dealing with. We have seen cases wherein someone has bought a call, which means if the stock goes higher, you should be profitable. Stock went higher and then they still lost money. Because the implied volatility actually crashed when the stock went higher. It doesn't happen, but it does happen in some cases. So understand the concept of implied volatility if you want to be active on options. So coming back to the fact that VIX is still sitting close to just 17. And I'm like, dude, we have a two major catalyst for VIX to start to go up. I think earnings season won't push it much higher, because even on the previous earnings season, it stays at 17, 18, 20. But now we have a phenomena coming up which happens once in 4 years. And if it was a almost, let's say, if it was a one-sided with an outcome almost decided, then yeah, fine. Market is not uncertain. But I don't think that the race is decided yet,
Vivek,
especially based on the last week.
Hello, Vivek.
Yeah, go ahead.
I didn't quite get when you mentioned are we getting something once in a 4 year. What is that? Can you add?
That's election. That's election.
Okay. Oh, election. Oh, got it. Okay.
Right. So we have a phenomenon once in a 4 year elections coming up, and VIX is behaving as if, hey, it's okay, but there is nothing uncertain. I don't know. Maybe I don't follow political news too much. You guys can tell me, have you already decided that who's going to win the race? I thought, based on the debate that Kamala and Donald Trump had, and they had only one debate. I don't think this is going to happen, the second one. It was on even keel. Because I saw the debate, I'm like, okay, I don't think it's a done deal yet. But maybe markets are right now saying, I mean, it's not pricing in yet. And we have, results coming in November. So I'm hoping that the VIX will start to spike up, will go higher. And then I don't want to, if you have sold something, and then if that price of that thing goes higher, that doesn't work in your favor, then you need to bring it back. Trump is ahead in a swing state, maybe. There is a prediction market, right? I know crypto folks will talk about it. Poly market. Again, I don't believe, how good, how accurate this poly market is, but let's.
Vivek, polls are totally inaccurate because who knew Trump would win in 2016? Even Trump didn't think he would win.
Yeah, but this, I mean, this one shows, and I don't even know. I mean, if they're saying, yeah, bet, what is this, 50 cents? Right. I mean, I don't know how they actually calculate and give the weightage to yes or no. Is someone betting $500 gets the same weightage as someone betting $1? Then it doesn't make sense because, hey, dollar I have to just like a lottery ticket. I don't mind paying $1 and just take a bet, even though I may not, I don't even know, who is really gonna win because there is no skin in the game. It's just $1. But if someone is putting in $5,000, yeah, they probably would have done some research, would have looked at other polls or whatever to make more informed judgment. So I don't know how this stuff works, uh, but it says 51.48, which seems to be closer. So again, I don't know. But the fact is, so the VIX is only here. I mean, it's been going down for after the Fed cut the interest rate, but it's only spiked on Friday. That I'm hoping that VIX should go really higher. Jeff says Trump is okay. Trump will win, although I'm not a big fan. Yeah, again, I'm not. I mean, I don't watch either CNN or Fox. Only thing if I watch it, I'll probably watch the business channels. But I don't know. Polls are wrong, and nobody knew. Nobody would have predicted. None of those poll pundits would have predicted that, like Sam was saying, Trump will win in 2016. Right? And then the prediction was if Trump wins, market will crash. Right? And I was stupid at that time, and that's the reason why I say I realized I need to get into options. Is I had not gotten deep into options that time. I was just trying to dabble, trying to figure out, and I had sold. I think it was 1/3 of my portfolio, thinking if even when Trump won, the market's gonna crash, and then market ripped higher. So I'm like, okay, I have to figure out how to not get scared. So we don't know. So first we don't know what the outcome would be. Second, we don't know if what the second order impact of the outcome would be. Right? So it is impossible to predict. And so I don't want to take any guesses in any direction in terms of whether the market will crash or not. So that's why I'll still stay in the market, control my risk. Fred saying polls are wrong. Have you seen 4 trillion plan? Markets will be tanking. I'm not sure. I think I have a chart which looks at the different presidential uh, years and then how the markets perform. So we look at that chart. Trump will be good to business at least first quarter he's elected. Market will be higher for sure if Trump is elected. I kind of agree to it because he's generally on cut taxes and do all those things. I mean, accumulating DJT. I have no interest in DJT, Dave. Yeah, that's like a meme stock, right? And I think DJT had an epic fall. Yeah, from 79, let's say the closure is like 70 all the way to $11. I don't know. But look at the IV on this stuff. So this beast probably is generally makes big moves. IV is higher. So, but yeah, it was even lower than where the SPAC was. Did DJT came out as a SPAC? I mean, almost no movement in the stock. That's why I'm just guessing. But generally, SPAC come out at $10. So I'm surprised that maybe should look at 3 year. This is what. Oh no, it's been around for some. Okay, so maybe it was back here. In any case, wow, it was what 100 plus, and now it's back here. Okay, yeah. If I were to take even if Donald Trump, it's clear that he's gonna become the president. I don't want to play with DJT. All right, enough of politics. Not my favorite topic, but we'll look at in terms of how the presidential elections have impacted the market. All right, so this is what I'm expecting is that maybe it will pick up in near future, and hence I'm holding back putting any new trades on, waiting for VIX to go a little higher because of earnings and as well as because of the election. So here's the chart that shows an average of 6 months before election, VIX, and 6 months after. So near to election, you see the VIX will start to spike up, right? And then it'll decline. It'll have immediate decline once the election is over, because yeah, then you know who's gonna be in the White House, right? Now that's how the VIX play is. But now I think there are questions around if Kamala wins, the market will crash. If Trump wins, market will go higher. So over the past 80 years, okay, I think, oh, so I'll come back to that. But this is another interesting stat. Over the past 80 years, in 1 month leading up to the presidential election, stock market was positive for only close to 50%, right? So getting into election, we don't really know whether that month will be positive or not, because like close to 50% of the time it's been positive, 50% of the time it's not been positive. However, from election through the year end, the market has been positive for all years except 3 of them. I think I shared this stat in some of a previous session also. But so generally, irrespective of which party's candidate wins, markets have ended up higher except 3 years. There we go. Here, look at stock market return by presidential term. Right? You pick up whichever side of the aisle you are. It's the same stuff. For markets have generally returned positive, irrespective of who has been in the White House. Of course, we have a dot-com bubble crash and financial crisis, 2007, 2008. Those were what you call black swan, exogenous events that shouldn't happen and generally don't happen. If we didn't get a boost from, bazooka from Fed in 2020, maybe we would have a 2020 as a negative year. But
Yeah,
generally, markets
excuse me.
are okay.
I think that definitely shows that Bush was a loser.
Which is a loser? Berkshire
No,
Hathaway.
no, don't blame it on the recession. No, Bush is a loser. Look at that.
Oh, Bush. I mean, markets are still positive during the Bush time.
Oh no, it's 01 to 08. This is Bush.
Yeah, so that's something. These are those times when we had that bubble crash, right?
Oh,
So,
excuse me. I don't see bubble crash. I see Bush as a loser.
ah,
We were hegemony in 00. We were not a hegemony in 08.
I think, yeah, but we had that global financial crisis. I think any president in over there, that was an excess of a Wall Street. Then that. Anyway, he's no longer contesting. So yeah, Dave says, who cares about Bush now? Yeah, he's not in the race. Fred says huge money came in on VIX calls on Friday. That's why I think VIX spiked up a little bit on Friday. Again, they're trying to play the uncertainty, hoping that the VIX will spike up, and that may be a reason why such a call buying is going on or went on Friday. Other interesting thing, I think where's a chart? I'll come back to the Chinese one later on, but yeah, other interesting thing was this chart which I want to show. So Fed has cut an interest rate, and this is again so counterintuitive. If you are new to investing, this is so counterintuitive. What do we say? When the Fed increase the interest rates, it is bad for the market. Fed has started to increase the interest rate since March 2022, right? Almost 2 years ago. That's one. And look at what the markets have done since then, we'll go to March 2022, and I'll just pick the biggest one, which is S&P. We're talking about this is oh, I'm on 1 year. Let's go back to 3 year. Right. March 2022. Well, like this is March 2022, right? The start of this. From 420 to 574.
Someone is asking you, is that a Bloomberg picture?
No, this is think or swim. Come on, I don't want to pay 20,000, 24,000 to Bloomberg. I mean, I don't even look at my screens all day, so why should I even pay that? No, this is a think or swim. Oh, okay, that clip, yes. So that's on I think in Bloomberg.com or somewhere I saw. Yeah, that clip was from Bloomberg. Okay, so yeah, it's so counterintuitive. Fed has been increasing the interest rates and markets have been ripping higher. Now, what do? The general wisdom is, if you're trying to time the market, gosh, Fed is increasing interest rates, not good for the stock market. We're going to take the liquidity out of it. Not only just increasing the interest rate, but also Fed has been reducing its balance sheet. In any case, both technically and the traditional wisdom is that this thing is bad for the market. And what the market done since then? It's up 150 points, right? From close to 420 to all the way to what, 570 now. That makes us 150 with 420, like up 35% since then. So that is why it is impossible to know what market is priced in, what market is pricing in, how the world will react. Fed has increased the interest rates. Maybe companies will figure out how to charge more for that. Companies will adapt. It's not the first time that we have an interest rate which is 4%. I mean, go back to 1980s, 70s, we had a much higher interest rate. Okay, I agree that hey, the pace of interest increase is higher because over the last, any fund managers that have come in the market over the last 20 years have never seen these interest rates. Okay? And it is generally said that the financial market memory is 20 years. And after 20 years, people tend to forget what happened because the new crop of managers will come in, right? The current hedge fund managers or the Wall Street gurus, they will retire and the new crop will come in. They probably were too young when the previous crash happened. And that is why we'll see a crashes or some excesses in the market, which are close to between 20 to 30 years apart. Because the generation that learned their lesson have retired, have moved out of the market. Now the new generation has come in, which maybe have a faint memory, but they haven't really lived through the crisis that had happened, with the previous generation, and then they will commit the same mistakes. It's the same thing that repeats over and over. We had a crash in 2000, then in around 2022, it's the same excesses, unprofitable companies. Again, I was not invested in 2000. I also made the similar mistakes. Thank God the position size was not too big. That's one lesson that I learned during my options is, doesn't matter how great the trade is, just focus on position size. But we did a similar mistakes in 2021, putting money in unprofitable company, putting money into the companies that don't even have a product. They only have a business plan on the back of a napkin. And not only retail investors, like VCs went crazy over there. 22 years again, we did the similar mistake. So the financial memory is generally around close to 2 decades. That is why we see these cycles trying to repeat itself, between around those time period. So yeah, I even forgot where was I. Yeah, so interest rates increasing and the market is up 35%. Who would have imagined that? And now consider you're trying to time the market. It's the time to get out of the market if Fed is increasing interest rates. Now, Conversely, Fed reducing the interest rates is good for the market. So far in this week, it has played out. I mean, markets were ripped higher because it was last week, right? The Fed has reduced the interest rates on whatever after their FOMC meeting on Wednesday. Market wanted 50 basis point cut. We got 50 basis point cut, and markets moving higher. So yeah, it's impossible to understand how the market's going to behave, and that is why timing of the market is almost impossible. So, but this is an interesting chart which tells about the money market funds. So now Fed is trying to reduce the interest rate. They did a 50 basis point cut, and now market is also anticipating we might get another 50 basis point cut in the November FOMC meeting. The amount of dollars that went into money market fund, the weekly inflow has been highest. That is puzzling. The Fed is reducing the interest rate. Eventually, this money market fund will also reduce the interest rate. And then the stock market should give you better opportunity because the stock market does better if the Fed increase interest rate. So what's the logic of even putting huge chunk of dollars into the money market funds? But we had this huge uptick, the weekly uptick in the money market fund. Go figure. Why this thing? This is very counterintuitive, but things happen. So that was an interesting one. So I mean, again, I'm not taking any side saying, hey, it's going to crash or not. I just want to make sure that if the market crashes 10%, your S&P crashes 10%, I want to make sure that I am not scared out of the market. And I'm ready anytime for market to crash 10%. I think it should be fine. So that's how you have to position yourself because, yeah, it is uncertain. Having said that, I think some of the stats that we looked at, I think 2 weeks ago was after election. Was it after election? You know, after the Fed rate cut. After the Fed rate cut, 1 year after the Fed rate cut, markets generally end up in positive. I think there was some, but it's not without the volatility. And I don't recall which session did we discuss this. So you might see the market is going to stay volatile, might crash, go up, do the roller coaster. But 1 year and 2 year historical number shows that the market generally ends up in positive 1 year after Fed starts to initiate the rate cut. So that's why I want to make sure that the market crashes. You know, I'm still around if it comes back up. So Dave says if it market crash, you're not sure if you're going to buy after that 10% crash. I generally have a kind of a philosophy of, you know, if the market crashes 5%, then I'm going to put an X% of my capital on the side in the market. If it crashes 10%, I'm going to put another X%. So if it crashes 10%, yeah, I'm going to put money to work. And if it goes further down to 20%, then I'll put a little more money to work. And then when I say money to work, yeah, you obviously either S&P or I'm going to pick the best companies that I have on my watch list, but I still find them expensive. Right? I have Arista still on my watch list. I'm not able to. So I reviewed Arista 2-3 months ago, you know, and now the stock is super expensive, but look at the history of that company. It's been a great business, but I can't add more. I'm going to wait and just hold my watch list. When this thing happens, I'm going to go for some shopping. If a market crashes 10%.
Sure, Vivek, do you
Go ahead.
think is it right time to pull all your, sell all your stocks this time and then keep it, wait for the election times uh, uh,
I
for it to drop to 10%.
I don't know if it's going to drop to 10%. So I want to make it very clear. I'm not saying it's going to drop to 10%. I'm saying if the market drops to 10%, who knows? I
Okay.
already not burnt. I missed the opportunity in 2016
Mm-hmm.
when I thought if Trump will win, because that's what the whole media was saying. And I wasn't really that active in the market and I didn't know how to protect my portfolio. I had sold 1/3 of my position stupidly, saying, oh, if market's going to crash because Trump is going to win, and everyone's saying market's going to crash. Those people have been in market for way longer than I have been, and what a stupid mistake I did. But glad that I kept rest 2-3. So I'm not going to sell anything just because I don't know, maybe market crash, maybe market will go 10% higher. Who knows?
Mm-hmm.
No one knows. So I'm not going to sell anything. If
Vivek,
Sam,
so
let me just finish this point. If let's say you have a crystal ball, I don't have, but if you have a crystal ball and you're looking at the market will crash 10% and you want to sell it now imagine the consequence of your tax also. We actually forget, we don't even talk about it or think about it when we're trying to sell it. If you have held the shares for longer term, or if it is your short-term gain, maybe you're paying 20%, 30% to the tax person when you're selling those shares on the gains that you've earned. Do you think the market is going to crash 20%? So you also have to weigh in. Number two, the other risk that we talked about 2 weeks ago when we reviewed all the risk and investment is you end up into another risk which is risk of reinvestment. So you have to make two decisions. One is what to sell, then which one to now buy. So I am not a fan of, hey, let's sell the stocks because maybe there's some volatility coming in. Number one, we don't even know what's going to come in. Number two, we don't know what the extent what the magnitude would be. And I don't want to now go and pay to the tax person when the market maybe crash 2%. And here I'm paying 20%, whatever the capital gains, long-term capital gains tax 15%. In some cases, the short-term that you pay your normal tax rate, right? So yeah, well, I don't want to do that.
No, but then when is the right time to sell? Because what I see is S&P is all-time high. Uh, so what is the right clue for you to sell?
For me to sell, there are many rules when I will sell. Okay, I don't know which sector, but I like, maybe ping me separately on a meetup. I'll point you to one session where we talked about when to sell. And price, that it is an all-time high, is not even a criteria for to sell. There are many other reasons why I will sell.
Mm-hmm.
Valuation will be one. I need money for whatever reason I invested in to enjoy the gains, could be number two. Position has become too big part of my portfolio, could be another one. So there are other reasons why I would sell, but stock is at all-time high is not a reason to sell. And I think there was a chart that is on Twitter somewhere. I didn't have the report with me, so I didn't actually grab that tweet, which was investing in all-time highs has outperformed investing regularly on say 5 minutes. So which is again very counterintuitive. I did not have that author did not give a link to the study so that I could have looked at it. So I was not really sure into how authentic it is. But I have looked at one study where we had compared investing when the market goes down taking out money when the market goes down 5%. Was it other way? I think, yeah, selling when the market goes up 10%, reinvesting when the market goes down 10%, staying investing, or or buying. And there was a fourth one which was like buy when the market is only up 10%. And counterintuitive is when you like sell high, buy low, will tell us that maybe selling when the market hits 17%, 10%, and buy it back when the market is down 5% should have performed better. It was the worst one. So that study I have, I think one of the sessions I talked about. So I'm not a fan of trying to time the market. If the valuation wise, if it is a super, yeah, then I'll make a decision, but not just because that the stock price is high. Is the valuation too high? SPY is what, 23, 24? I don't know. We'll have to check what's the PE of a SPY currently is. Then I'll make a decision, but not that because SPY is at 570 or it is at all-time high. I mean, NVIDIA became cheaper after it became all-time high. NVIDIA was more expensive when the stock was at $30. Then when the stock was at $70, it became cheaper after the stock went up from $30 to $70. So yeah, I don't look at just the price. Okay, Fred says play 0 DT momentum trend end of the day in cash. Oh yeah. 0 DT is like a new casino. And not just in US. I came across some stats, and you know I hope none of my family does it over in India. But the folks in India are growing crazy over these options and futures. F&O is what they call as 97% of the world's index options, the volume was conducted on Indian exchanges, NSE. 97%. So this craziness of 0 DTEs and whatnot. I think 97% or 90%. In any case, it's a obscene volume on a stock exchange, which is not, it doesn't even figure, no one talks about Indian stock exchange when you see the financial media talking about the world exchanges, right? We'll talk about Hang Seng, we'll talk about Nikkei, right? We'll maybe talk about Kopsi, which is Korean, right? Then we'll talk about Chinese market. These are the market or the stock markets that is generally being talked about. Indian stock market is not that big yet, but you have a 90% plus Indian index option volume being traded on Indian stock exchanges. And there was a study which the regulator had provided that I think 95% of retail investors lose money, but people will still do it, right? So 0 DT is now 50% of the option trades in US is 0 DT. Yeah, I don't do that. Dave, you're a day trader and it's still too wide for you. So I mean, those who are I would say partially invest. I mean, those who do it along with their job, stay away. Yeah, don't get sucked into these 0 DTEs. All right, let's talk about. I think in my life I have done only one 0 DTE, just for the heck of it. I think it was an iron fly I did on SPY or whatever. That's the only one I did. Let's talk about Chinese. What happened in the Chinese market this week? So, Chinese government came and gave the stock market, Chinese stock market slash the residents a bazooka of liquidity. So they announced plans to provide to inject liquidity into the Chinese economy, because if any one of you are invested in Chinese stocks, or if you have friends or family in China, over the last 2 years have been tough. And majority of the wealth of most of the people residents in China, it comes from a property. Right? I know same is the case in India as well. Stock market is coming up now, but and the property sector in China has been in death trap for almost 2 years. Ever since we had a bankruptcy of Okay, I'm not sure, did they avoid the bankruptcy? But Evergrande, I think they went through the bankruptcy. Then there was another big developer that went through the process. They missed the payment. So, and there was the construction of apartment complexes. They overbuilt it. Now the developers are not able to sell it. And the way like every developer works is you take on loan, build the stuff, and repay when those are sold. So many developers got caught into the trap because those apartments were not selling and hence had to declare bankruptcy. That means the people who had given some of the initial amount to the developers for the next apartments, their funds also got stuck. So the situation in China has been bad. Chinese equities, it kind of hasn't done much. If you ignore this let's go and pull it last 5 years. Right? I'm ignoring this one, the latest one. So this is FXI, which is large cap China ETF. You go back all the way to 5 years, it's still below where it was 5 years. You just lost money overall in China if you had invested in China 5 years ago. Right? Or let me put it this way. Okay, so over here, except I guess over 1 point here and a little bit here, and you kind of lost money if you did in China in 5 years. Market has gone nowhere. Whereas the rest of the stock market, US and even the other markets across the world, India has been one of the best performing stock market for a decade, even beating US. Markets are doing good. So last year, and I think not last year, I think the start of this year, we started seeing all the headlines around China is uninvestable. And of course, I don't want to get into all the details now. The usual risk applies, which is you have a CCP, you don't know what government can do because the government has a lot of a control in China over the businesses. If the government are not benevolent, it's going to be great. But they became kind of an anti-industry, anti-tech, big businesses in 2021 and in 2022, start of 2022, when they started going after this Alibabas and all the big tech companies of the world, all the tech stocks crashed. So look at Alibaba. Trying to get an Ant IPO in 2021, it was like 300 plus, 310. It's been a brutal ride to almost $80. Right? So this week, eventually, looks like I think President Xi has a goal for some 5% GDP growth or something, and that's not happening. So they announced a lot of plans. One was the repo rate will be lowered to 1.5%, making it easier for banks to get loan. RRR low, which is reserve ratio of the banks, lowered by 50 basis points. So in US, we don't generally talk about RRR. I mean, when I was reading the history of the US economy, how banks function, looks like in 1980s, Fed used to make use of reserve ratio to control the liquidity. Now we don't even do that. Now we do it via Fed rate. But in China, they still use reserve ratio, and that lowered by 0.5% means that the banks will have to hold less reserves on their balance sheet, means they can loan out more to the businesses, to the consumers. So reserve ratio is basically amount of a percent of the funds that bank need to hold in cash on their balance sheet, so that if you have a bad loans or if the economy goes down, you have a healthy cash. In US, it's 0%. So technically, in US, banks can leverage infinite because they have a reserve ratio of 0. I don't know what the reserve ratio in China's banks is, but now when you lower that reserve ratio, it means now the banks have a more cash available to give the loans to consumers, to business, Now you add a multiplier of fractional banking. $1 of a cash can now become $10 of a loan, right? So that basically have a multiplier effect. So that was a RRR they lowered. But this is the plans. They didn't specify when it will take effect. Minimum down payment for a house has been cut down to 15% from 25%, again, to trying to prop up the real estate sector. Okay, so they say they may cut another RR by another 25 to 50 basis points. It won't apply to small banks. Again, this is for the big banks, which government, is sure that if they have a little less cash, they can survive. Deposit rates will fall. That means if you are keeping your fixed deposits in the bank, you're going to get a little less percent return. So you would rather maybe put it in the market. And the central bank will cover 100% of the loans for local government buying unsold homes. So like I was saying, there is a lot of unsold homes, apartment complexes. So we have a glut of supply in the market, and the developers can't sell it because there are no buyers. So if they can't sell their current inventory, they're not going to make new homes. So home industry is a big, it's a mover of, it has a lot of positive downstream impact, right? If you're trying to build a new home, if it's a wooden home like in US, then lumber industry and all the other construction industry, they get a boost. Or in US, then your concrete in China, concrete industry or iron ore industry, a lot of stuff goes in constructing a house, right? Your electrical appliances, consumer goods, they all get boost. So now the central bank is saying, we'll basically cover if a local government is buying homes, so it's kind of giving a dose to developers. Government will come and buy the homes that you build, which no other customers is doing. And then the government is taking loan from the bank, and central bank is saying we'll back up 100% of it. So it's like a free money. You can go and take a loan and the central bank will cover 100% of it. It's just gonna basically money printing goes brr. Just like a US government did kind of during the COVID time, is now the Chinese government doing it. And what I read was this is kind of the biggest package of stimulus since 2008 in China. So China did not do that whole bazooka during the COVID. They did not send out free money during the COVID. Now, there are a few other changes that have happened is they've also earmarked a few $billions to just give it to the poor section of Chinese society, right? Encourage them to go and spend more. It's just the money will be transferred to their either the bank account or whatever digital you want. I don't know the modality, but
Vivek,
they earmarked some $100 billion plus for that. Yeah, Sam.
2021, she declared victory over poverty. And then last week I saw headlines that he's giving money to the extreme poverty. That's what the media, Chinese media, lies about.
Yeah. So
Okay.
yeah. So now the problem is, now she had already declared the zero poverty. She had declared that we're gonna have a whatever 5% growth rate. Now the rest of the his Politburo or his comrades are now figuring out how to get that done. So giving free money, and you probably are right, more information, but yeah, that's what I read, that they're gonna just give folks, the poorest sections of society, they're gonna just dole out money to them. Another interesting which generally don't see in the Chinese media is she is telling the government officials to go bold and help and drive the growth. Like, go bold. They say, okay, even if you make mistakes, you have a punishment waiver. Okay. So it's like a clear signal, go all in. buy the apartments, give money, do whatever so that we can have that 5%. She wants 5% growth or whatever the number is. I don't quote me on 5%, but he has a target that I think he had shared saying we want to have achieve this whatever GDP growth. Now he says go all in. Even if you commit mistake, you have a punishment where we're not gonna punish you, because in trying to do that, obviously there will be some mistakes. There will be that money will get used for nefarious purposes. There will be some bungling that will happen. There will be corruption. Some officials might eat it, whatever it is. But she says, go ahead, be bold, and do the things which you think is going to help the economy without a fear of being punished if mistakes are being done. So this is a clear signal from the top of the political power, which actually exert a lot more power on economy in China, to go all in. And look at the Shanghai Composite Index. That's the reason if you look at any of these Chinese equities, there was a buying frenzy and the exchange started to have a problem. Shanghai Stock Exchange. And CSI had the amount of gains that this index had was the most since 2008. That means almost 16 years. They never had so much of a weekly gain in last 16 years. So Chinese government has released its bazooka. Now the question is, hey, who's going to pay up for all this? Right? It's the same stuff that US did when we levered up our balance sheet during COVID, and eventually we'll pay up through the inflation or debasement of our currency. Yeah. Next generation is going to pay up for it. Our debt is now $1 trillion. Oh, sorry, interest on the debt is $1 trillion. Our debt is what, more than $35 trillion. Well, who cares? Trump will not be there. Kamala will not be there whenever, we'll have issues in paying those interests. By the time they'll be out, someone else's problem. I'll be out, it's the next generation's problem. So this has been happening for every generation.
When I was in undergrad, you were alive. We were worried about, oh, now I know how old you are. But anyways, when I was in undergrad and you were in high school, the international relations or economists professors were worried about 4% interest payments of the GDP. Well, now it's 9% or higher.
Yeah, so now the Japan has given us a model, right? Japan's like GDP to debt ratio, sorry, debt to GDP is about 250% plus. And this Japan is not dead yet. I mean, yeah, the economy, the market has not gone anywhere for last 40 years, except in the last 1 year. Japan had what, 4 decades of lost decades. And it's only last year that Nikkei was back up to where it was in earlier, maybe 3 decades, 1990s or late 1980s. But that was because the Japanese stock market was gone crazy over the property stuff that had happened. But yeah, I know the world is watching that Japan can survive with 250% debt to GDP.
Hey, Vivek.
Maybe we can. Yeah, Jeff.
Hi. Just wondering what you thought of that flash crash event back in early August and how likely it could be we could see something else like that. That was damn scary, man. That was really scary.
Yeah, so that was scary because of, again, a lot of funds were over leveraged on the yen carry trade. And that is why most of the time we'll get these black swan. I don't think that's a black swan event because the markets were down like 5%. I don't even consider that as a bigger crash. But these, let me put it this way, the volatility comes from the areas where we are least expecting. No one was thinking about the Japanese yen carry trade eventually when it actually broke, because it raised the Japanese central bank raised the interest rates after what, 2 decades. No one could have thought that Japan will be able to do it because they have such a huge debt load. And what what I'm hearing, and again, I don't have any insider information. I'm just a normal retail investor. I don't even have a Bloomberg terminal. So, but I'm hearing is that the yen carry trade unwinding may not be have completely done. Maybe there are still big funds that still have an exposure on the negative, basically short Japanese interest rates and long the US, and which was the other one. So I don't know, but if it is, I would say, if there is some unwinding still waiting to happen, and if Japan increase the interest rates again, maybe we'll have a volatility. But I don't have any information of how much of that carry trade has already been offloaded and how much is still remaining. So that's why I'm always prepared for another 5%, 10% crash. All I can do is to manage my portfolio rather than try to predict what might happen in the market. That's my thought. Sorry, I don't have a clear answer because I don't know.
Might be interested to hear how you would hedge for anything like that long term.
So for example, I just look at my deltas of my portfolio and see how much delta I want to hold in my portfolio. So since last 2 or 3 weeks, market has been going higher. I've not made that amount of money. I made less money in the market than if I would just held S&P 500, because I had a lot of a negative delta by selling options, right? Now those options are underwater, which is fine. And hence, if the market has been up 5%, or let's say last 2 or 3 weeks, I don't know how much percent it is up. I made only 3%. But I'm okay with it, because if the market falls down by 5%, I'm not gonna fall by 5%. So that's how I hedge my deltas. I look at my deltas and say, I'm okay with these deltas with market sitting at 572, right? And this is just because my thought process on how I want to manage my portfolio, right? I don't have to go crazy. I don't want to, take a risk, which I don't have to, because I want to make 30% per year. I don't need to make 30% per year. So I don't want to take those kind of a risk. And that's how I'll hedge my portfolio by doing the delta reducing trades, which is mostly, a lot of my option trades are. I have a short calls on QQQs. Last week we told, couple of them got assigned. Now I'm holding some short shares. I closed some of the short shares, but I'm still holding short shares on QQQ, as well as short calls on QQQ, short calls on SPY, short shares on SPY. So if market continues to go higher, I'll probably lag the market, but I'm okay with it. If market goes down, my main concern is to protect my downside, not lose my upside. The opportunity cost of losing my upside, I'm okay with it. So that's all. I look at my deltas and I'll protect my deltas. All right, so Baba has been ripping higher. Well, like from 90 to 109. Pick up any. This is JD.com. Wow, from 28 all the way to 39. I had a short call on, not short call, I had a covered call on JD, on portion of my holdings of JD, which is now in the money, they'll got called away. But my rest of the stocks have gained. So there is no free lunch. You want to reduce the volatility, you have to be okay to give some upside gain. Right? There is no free lunch in the markets. Pick any other one. So I think I did have a. Let me get to that. Okay, I gave up the subscription, and now they start sending me ads.
Duo, perhaps.
Sorry, just one second. Let me visit. Where did the chart go? There we go. Yeah, Baba FXI. FXI is a large cap ETF. 832. JD.com has the biggest move, looks like. KWeb, which is Chinese internet ETF, right? From close to 26 all the way to 34. Li Auto, Neo, PDD, Pinduoduo, from 100 to 135. Now, the Pinduoduo has its own problems. So Pinduoduo has they're having a kind of merchant revolt in China. They've been very, what I would say, very strict in terms of, not giving the whatever the percent commission that merchant earns when the goods are sold through Pinduoduo, because hey, some of the customer returned it and now they are penalizing the merchant. So there have been a protest and all that. So Pinduoduo has its own problems, which is different. That's why the stock is, the fell down, and they also had the earnings guidance issue, but still from 100 to 135, 30% up, right, on this bazooka. And EV have their own structural issues, import duties, etc. But still, even XPEV is up like 20%. What other stocks you want to look at from a Chinese perspective? Chinese stocks.
Vivek, it looks like I'm going to earn some money on my calls. I've lost 20,000 on my Baba options.
Yeah,
Should I hold or just sell it when it expires?
I have no idea what's the strike price. Where did you buy it? And is it in the money or not? I don't buy the calls. That's the reason, because we'll have to wait for these magical moments, which now has happened after 2008, right? And that's why it's not my strategy to buy the calls.
Okay, thank you.
Such a stimulus, China has never given, such a stimulus since 2008. Why would I buy calls if it is dependent on such a, for it to be profitable for this moment? It's like a lottery ticket.
Vivek, would it make sense to sell puts on the index?
On which one?
The Chinese equity index. I'm not sure which one. Yeah,
so FX, CSI, I don't know, how does that get traded? I don't think we have an index ETFs on, or maybe we have, but I don't trade in the Chinese index ETFs. But FXI is a large cap China ETF. It is equivalent to our S&P 500, right? Now the question is, what do you think? Is this a momentarily jump up higher? Because is this stimulus going to make any structural changes? I don't know. Right now, market is super excited because everyone wants to buy the Chinese equities because it's bazooka. But if it is not going to make any structural changes, it may be just short-term lived. So, but if you are bullish at this point of a time, it makes sense to give ourselves some room for error. Then the better would be to maybe sell a put rather than trying to buy the stock outright or to buy the call, because that means the stock has to go up for you to make money. If you sell a put and the stock just stays here, you're still going to make some money. So, but if you are bullish, I'm not sure, how bullish am I? Again, we have no idea of what the market will do in short term. After the initial one, for a day, the stock, these Chinese stocks were down. And then 2 days later, it again went up. But if you are bullish, then selling a put may be a better way to get a bullish exposure than to buy the stock outright, because it will give you some room for error if you think it has run up too much too soon. So that's on China. Again, I think the overall Chinese economy is hugely dependent on export, right? They were and I guess they still are the world's biggest factory, right? The factory to the world, manufacturing factory to the world. So now if every country is trying to put duties on Chinese imports, we heard from European Union around duties on EVs, maybe steel, US rhetoric, and look, Trump's rhetoric is even gonna, import duties on any Chinese import coming in. Then he understands that he needs to do something. Otherwise, the situation will probably gonna become even worse if every country start to, increase, if they have a headwind from increasing import duties. I don't know how much China can retaliate. Again, those geopolitical constructs, none of us can figure that out. And I think Xi is trying to do whatever he can to prop up the economy. Now, Chinese stock market has responded positively. But what I don't know is there could be short covering in this. When everyone said the China is uninvestable at the start of this year, when I say everyone means institutional funds, if you go back and look at the stats, a lot of mutual funds, institutional funds move their money out of China. And I won't be surprised if some of those, over-enthusiastic, creative fund manager actually went short on China. And if they God save them, if they went short on China, right now they are being hurt. And maybe this is short covering. So we don't know. Any of these possibilities or some mix of each of these possibilities may be possible, may be happening here, right? And so we don't know what might happen in a short of year. And that's why, did I sell all my positions in China or in the Chinese stocks that I hold? No, but I did sell some calls against, a couple of my positions. I had a call spread on Baba, which is now in the money. Right? Am I selling a put right now? No, I'm still holding the stock. Again, sometimes it becomes more art than anything else to try to figure out, okay, how do I manage my deltas on my Chinese equities, given the fact that you don't know what's happening in future, which is why I love this investing. It's a
It
fun.
seems like the China or the Taiwan question would be somewhat mitigated by the Chinese government's interest in increasing their growth rate, because if they started getting overly hawkish on Taiwan, the world would react, and it would certainly cancel out any of the efforts they're making.
Yeah, so it means that would be good for some of the Taiwanese securities that we will hold, right? But I'm not sure how does that, impact the other Chinese securities that gets the Chinese companies. Will the world now look at China in more positive light because they've toned down on Taiwan? I don't know. But I think last 2 weeks or 3 weeks in the South China Sea is become more tense. There have been, I think, some clash with a Philippine boats, some Japanese ships are there. So again, I have no idea.
Vivek, actually, a year ago, China ship rammed American ship, but U.S. put some blankets over the side. It didn't really publicize it, but I saw it on YouTube. China ship ram U.S. ship.
Yeah. So again, news could be, news is always narrated in a way to generate more eyeballs. So whether it was a ram, whether it was a brush, whether it was just a touch, or maybe they came near to each other, who knows what the reality is. And so that's why I don't want, one thing which I have seen that over next 15, 20 years, market goes up because the economy goes up. Just because money printing continues to happen, the assets that you hold will continue to go high in value. What could happen in next 1 month? We have no idea. And that's why I don't want to focus on what could happen next 1 month. Just to make sure that I'm not getting killed. If in next 1 month, 2 months, 3 months, 6 months, next 1 year, market is down 20%. If I don't get killed, that's why I manage my own portfolio accordingly. So what happened this week? We had a risk on, plus we had a little sector rotation also. So the Microsoft and Apples were not the biggest winners. Google and Meta were not one. Nvidia came back up. So we saw chip sector gaining back up. And, Tesla was up 9%. By the way, Tesla has got their robotaxi is coming up, right? Robotaxi reveal, it's on 8th of October. So we'll see what Tesla will reveal, but market is super excited about what Tesla may have to do. Healthcare and financials, the two sectors that have carried us or for the last, before the Fed announced the rate cuts, they didn't perform that well because, hey, now everybody's got a license to gamble, is trying to move into more risk on sectors. Same is the case on the crypto side. Bitcoin actually had hit more than 66,000 somewhat of a time. This screenshot I took today morning. So still up, 65K. Again, same story. It's a debasement of currency. Your interest rates big so higher, and a little bit of coming from an injection of liquidity, or you can say the Fed cutting interest rates. Some positive news, we have options approved on IBIT. So now if you have a crypto exposure, you can start to do some hedging stuff. Now you have options available. Right? Of course, the options on futures have been there for 4 years, but there are other issues around the futures that I never dealt in the futures of crypto. But if you have exposure to crypto, I don't know when the options will start trading. Well, let's see if IBIT has started trading or not. It's been approved only for IBIT yet. No, not trading yet, but it's been approved by SEC. Other big thing that happened, and again, I only heard it, I didn't read through the notes because I'm wondering how they allow it, is to have a BNY Mellon, which is the biggest, the BNY Mellon, the biggest custodian bank. They have a history of more than 100 plus years to do the basically do the custody. Now they have been working for almost, I guess it was 2 years ago news, or maybe 18 months ago, when they were basically building the capability to do custody Bitcoin. At that point of a time, the institutions were not even there. But what I heard is the regulators have approved it to hold Bitcoin, and SEC has given them exemptions from the SAB 121 that we talked about earlier, which makes it for all other banks. It makes it difficult for the banks to custody Bitcoin because of the quirk in the accounting rule. But SEC has given an exception. Again, I think I heard it in a podcast, so I don't have the real detail. Maybe I'll look for it this week and can share. But if that's gonna be there, then it'll be, maybe they are anticipating that more institutions might want to hold Bitcoin on the balance sheet, and they will need a custody solution. Today, Coinbase is not the only, but the biggest custody solution. And, they're minting some good amount of dollars from that. So Coinbase's margin is BNY's opportunity. So yeah, when that will happen, who knows? Whether institution will move into this or not, who knows? But some of the big firms are preparing that, that they understand that this is not going to go, this asset class is not going to go anywhere, not going to disappear. So better be ready for it. Time to add BIT. Oh, Beto isn't Beto a future one? Or it's the ProShares Bitcoin strategy ETF. It's up to you. I mean, I've been watching this space now for almost 7 years, and the outlook has to be 20 years. Right? My outlook is that it's not for me. This asset class is not for me. It's for the next generation. So you have to position size it accordingly. So my position size is, if it goes to 0, it's okay, I won't get killed. But if it goes to the moon, that'll be good enough, right? So it's got an asymmetric return profile, means if it doesn't work out, a small is all you would want. And if it really works out, a small is all you would need. So you have to position sizes accordingly. I'm still okay to wait for 15 years for the real use cases around the crypto to actually show up. I mean, except the Bitcoin as a store of value, nothing else is working out in terms of the real economy. Yeah. But I'm willing to wait for another 10, 15 years. So, yeah, you need to really have, it's like buying into internet economy in like early 1990s. I wouldn't have known that there will be a Google coming up in 2003, or there will be a Amazon that will come in 2000. We were still just building the technology of internet at that point of a time. We are so early in this. So that is why I'm still okay to wait for another 10 years. There are a lot of stuff to be done. I don't even know if some of those can actually be done. But space is exciting, and I want to have some skin in the game so that I can watch this space. Any correlation between Bitcoin and finance or tech? So Bitcoin have had a correlation generally with the tech because both are risk on asset classes. When you have a liquidity or free money, you'll basically take more risk. Growth tech. When I say tech, I think you may be referring to the growth tech, means companies that don't make any money right now, maybe expected to make in future, and you're buying on that promise. Yeah, with the Bitcoin, we had a similar promise. But over, I guess, last 18 months or so, that correlation has been broken. So now what the market participants are finding, and which is why it is even more bullish, is that it becomes an uncorrelated asset. So the biggest, and I'm not a money manager, but if anyone of you is money manager, you can correct me. But the biggest worry for the money managers is how to find uncorrelated assets and invest in it. The big money managers are not there to get 5x return in a year or 100% return in a year. They are managing money for institutional funds, pension funds, endowment funds who have liabilities to pay up for. So their idea is, I want to have uncorrelated assets, and uncorrelated means that if stock market is going higher, my other asset may not go higher. That also means if the stock market is going down, my other asset may actually could go higher. So we want to have a more uncorrelated assets so that at any year, I'm not completely down because I've put everything into stock market. I want to have some other assets which don't move in the same direction as the stock market moves, so that I can still meet my minimum liabilities, right? So if you are if this is your only source of income, let's say investing, then it makes sense to have some uncorrelated assets. What if you get a year which is like 2022? If everything is in the tech, that becomes a problem. So now if it is an uncorrelated asset, if it really proves out to be an uncorrelated asset, I won't be surprised to see that the model portfolios will start to include Bitcoin in the default option, because that is a good from a fiduciary perspective. Trying to make 50% year over year is not great from a fiduciary perspective, but trying to reduce the risk and generate decent amount with a less risk reduction is a kind of a fiduciary responsibility. So if it really, the uncorrelated asset theory works out, which I think last 18 months, because the market has been ripping higher, Bitcoin hasn't done much. And when the market goes down, we have seen the cases when the Bitcoin went up because of the bank crisis. So if it really turns out to be an uncorrelated asset, just like real estate was considered to be uncorrelated, then when you buy your 401k, when it goes into your targeted retirement fund, maybe some of it will go into the Bitcoin. I mean, China Fidelity already did it. In their conservative fund, they have done what, 2% or 3% allocation of Bitcoin. We don't have that in US yet, but I won't be surprised that we will have it if it proves to be an uncorrelated asset. That's one of the biggest worry of money managers, is how to preserve. And if you are in a capital appreciation versus capital preservation mode, the strategies that you have to use going to be different. So now I'm going through my own journey. I'm thinking I can't do the stuff that I was doing 10 years ago. Now I have to start moving toward capital preservation, because if I make 15%, 20%, good enough for me. So rather than looking at capital appreciation strategies, I'm trying to look at more at a capital preservation. So that was the all right. Fear and greed index. We are last week. Sorry, we are now at 68. Last week we were 63, and yeah, free body. It still hasn't gone to the extreme greed, but watching this for over now 4 years, one thing which I've learned is when this actually shows that you're in a greed one, I want to sit back, relax, and not go crazy on the market. No, I want the market to be in a fearful state for me to become bullish. Right? Go out for a shopping when no one else is buying. You'll get things much cheaper. You got Meta at $90 in 2022. But then you need to have that courage to buy it at 2022 and a vision to know that Meta's, they still have 3.5 billion population, and their advertising business is generating so much out of a cash that even if you're spending $10 billion on metaverse, it's not a great thing, but it's not going to kill the company. But in 2022, market kind of presumed that this is going to spend $40 billion over 40 years. It's crazy. And Meta was available at, if you were watching, or if, and Meta was available at less than $90. Today, Meta at close to 600, 567. Right? This is one of the big winners over the last 2 years. So that's why the watch list is important. When the market gives you these opportunities, that's the time to go and then buy. But you need to have that courage when everyone else is saying, is dumping it. All right, so quick update on a portfolio changes. Again, not a recommendation, but from a transparency perspective, because we talk about stocks, I don't want to share any stock movements that I've done in portfolio. I bought some QQQ. Again, these are the short shares that I held because my QQQ short call got assigned. So covered a little bit of that, I still have short shares in my portfolio plus, short calls on QQQ and SPY. Maybe I'll see if I cover them or, whichever way. Basically, it's a negative delta. I added a little more delta because markets went up and I lost some delta. So I added a little more delta to portfolio. Hall of Fame, like 4 Chinese stocks in portfolio were at new 52-week high. And reasons we already discussed. Again, SPY, Valley, these are all hitting new 52-week high. Boeing continues to be a thorn in portfolio. I'll still hold it just because, hey, this is the only, they have such a big moat. There is no, it's only the Airbus. So again, position sizing is important. If it goes to 0, fine.
Oh,
I'll be angry, but I'll not be dead.
Vivek, is Intel also part of it? I see Intel also, it's quite down.
Yeah, so Intel, I talked about it when 3 weeks ago, when the price to book value was 70 cents to $1. Right, so market at that point of time I had given up, saying even if you sell Intel's all assets, and I didn't do the calculation to see how many what was their intangible, but let's say even if their 70 cents to $1 was very cheap in my opinion. Even if Intel closes business and they may be able to get more than 70 cents. That time that the stock was at 19 or 20. I think below 20, I still feel it's a good buy, but now there are more interest in
Yeah.
it. So again, I think maybe big money was also watching the same stuff and say Intel looks very cheap. So we saw Qualcomm trying to buy Intel, and Apollo is trying to inject liquidity into Intel. But long term, I don't know what it, I mean, it's in Intel's case is they still have to prove their long-term story, but sometimes even a not a great business could be a good investment because it's available at such a cheap price. So I'm not too bullish on the Intel's business future just yet. I want to see how their foundry business works because they are trying to take head on with TSMC. Today morning was the news that Samsung has been trying to get their 3 nanometer and they're having efficiency problems. So TSMC is the only one which is the game in the town then for 3 nanometer, right? I don't know Intel's, I think the Intel's latest plan is for 3 nanometer. Intel is strategically important. That's another reason if you want to stay in Intel, just like Boeing. Right? Boeing has done a lot of mistakes in terms of its business, but US government can't let Boeing fail. Who are you going to go to? We will be 100% dependent on Airbus. Who else is there? That's the only reason why I'm still holding Boeing in my portfolio.
But is
Intel,
it right time to buy both Intel and Boeing?
I don't know about the right time to buy on the Boeing side. If it's only for a strategic importance, maybe I want to take an exposure. So business-wise, they haven't done much. Intel's the same case. Who else in US company makes chips? No one. Who else even has an experience to fabricate chips? No one. Who have a plant? No one else. Even though they have, they bungle upon, they'll miss the mobile wave, ARM. They miss the AI wave, which NVIDIA took over. Only thing that they have is a CPUs. If CPUs are no longer needed, then I don't know what Intel will do. Right? That's why they're trying to become a foundry business so that they can start making chips for others. Because when it comes to the chip designing, their forte was in CPUs. Now we are seeing a laptops with ARM architecture. So, but if CPUs itself is gonna go dodo way, maybe 5-10 years, then the only business that Intel will have is a foundry business, in which they have a tough competition. So anyway, so Arista network hit another 52-week high again this week. And so I just tweeted about Arista so while the market is focused on Palantir, Google, Meta, Microsoft, Arista has been quietly performing without this stock doesn't get covered, doesn't get so much of a press. But I think it was 2 months ago when I said I want to. I did a deep dive on Arista, right? When trying to build our thesis, and we're trying to understand the company. I mean, look at the last 10 years, 15 years, 12 years. I love these metrics. That on average 20% return on invested capital, with the revenue growing to in mid 30s, with your EPS growing to like 40s. What else do you need? With the net profit margins like mid 20s to 30s, what else you need? And free cash flow positive. And not only like during the AI tailwind, average of 5-year, 10-year, 12-year. This is a company that has been GAAP profitable every single year ever since their IPO. But they have a risk. 2 customers account for more than 40%, or close to 40% of its revenue, which is Meta and Microsoft. If the Meta and Microsoft have a business problem because of the AI doesn't take off and they don't need the AI networking, Arista will crash. Or Arista will lose a lot because 40% business come from Microsoft and Meta. Number 2, second concern is I think it is right now too much higher valuation. So I'm not adding anymore, but it is on my watch list. Right? If market crashes, not because of the business's problem, but because another yen carry trade happened. That has nothing to do with Arista business. In fact, I picked up Arista in August when yen carry trade crashed the market. It was below the price at which I was comfortable. That's the time I'll go for shopping. So have your watch list ready. The market will give us those opportunities when the stock that you want to buy will go down for any reason which has nothing to do with its business. That's the time when you go and okay, I want to buy this. Because what is yen carry trade gonna do to Arista network? They don't even have any Japanese customers. They have a 0 yen exposure. What is that gonna do? But along with the rest of the market, it was also down some 10% or something. I don't know the percent, but it was also down. I mean, every stock went down. So yeah, let's go bullish there. Anyway, so that's our stuff. Anticipating earnings next week. Not much, it hasn't started like fully, but we have a Nike, we got a McCormick. I'm interested to see what's going to happen with Nike with a new CEO. How are they going to change the strategy? I mean, it's a brand that is well recognized, but right now it's the same term like a Starbucks. Great companies, great businesses, used to be great stock, but over the last few years, the stock hasn't been great. I mean, if you're an investor in Nike or Starbucks, you lost money. Or you didn't make as much as what you could have just made in S&P 500. But in a long investment thesis, 1 or 2 years don't matter. But Nike had the business issues by the pivot that they did during the COVID. And now let's see what the new CEO gonna do. All right. Jeff says I picked up a large position in Intel. Dave said, didn't Intel start their foundry? Yeah, we talked about it. Are you selling covered calls or? Oh, okay. So that was a question to Jeff. What else this week? We saw Meta. Meta is now spreading its wings because gotten burned once. It doesn't want to get burnt again. So it wants to own the operating system. Otherwise, it's completely dependent on Apple and Google for any improvement, for the revenue. If you want to improve your application, you have to go through Apple because Apple maintains that gate for mobile. So Meta, and that's the reason why Meta wanted to do the metaverse, is they want to own the next operating system for the next computing platform. So we moved computing platform from computers, which kind of owned by Microsoft, or maybe Apple a little bit, outside of US. The overall share of Apple Mac is much less, but it was between Microsoft operating system and Apple. When it came to mobile, again, it became Google and Apple. And that's the time when Facebook came into life, when the mobile was picking up, and they kind of missed the boat on owning the operating system. So now the third computing platform will be, why do we need a cell phone? Right? If I can get everything on my glasses and all that stuff, why do I need even cell phone to type or even speak? Why do I have to look down, etc.? So he's trying to own the next computing platform, or for mixed reality, virtual reality, call, metaverse, whatever. So few updates that came from Meta in their Meta Connect, which is equivalent to WWDC. One was improvements to AI. So Meta is the only big AI player that has open sourced its AI model, which is Llama 3. They released Llama 3.5 and which has got some live translations. There are some decent updates in that one, but that wasn't super exciting for me. Sometimes I feel it is a little scary also. So Zuckerberg called on a creator onto the stage, and then basically then he was asking questions on, I think it was a Facebook app or whatever. Is talking to the digital avatar of or digital twin of that creator. So that creator's digital twin have been trained on on the creator's personality, how he responds, and then Zuckerberg is asking question to him about his new book, what he thinks about a new book, and he responded to. So sometimes it's scary because let's say if I'm reaching out to person X and I'm talking to I shouldn't even say to the person because don't even know if that's a person or is the digital twin that has been trained to speak and think and respond like that person would have responded. That I find little scary, but for creators is great, right? They can engage in one-on-one conversation with the fans. You can't do it, right? If you have 1 million fans, you can't replicate yourself. But now you can have 1 million copies of a digital twin, everyone talking to you, and you kind of, you means your digital twin is responding as you would have responded. But I guess every time, maybe next 10 years, every time I call someone and talking to a, in air quotes, person, I have a doubt in my, is it really person? Or is this a digital twin over there? But anyway, that was a little scary, but yeah, that's where we are moving to. Your bank withdrawals, that's already been cracked now because a lot of these AI models, sound one, they are able to speak in the sound of right now the famous personalities. So Zuckerberg on I think it's on Insta or one of these the Facebook's property, Meta's properties. Now they have licensed. Of course, they pay to those creators. 5 or 6 creators are there. When you're talking to the AI agent, that AI agent will respond to you in the voice of your favorite. I think there are some movie actors in there. Maybe there are some singers in there that they've licensed with. So you can actually talk to the AI and respond to you in the voice and the sound of that creator. So any bank with the online banking transactions in which we use voice-based recognition is going to go out of the door. So that's all. That's being broken. That's already been broken. It's happening anyway. But what was most exciting for me in the Meta Connect 2024 was first look at the Orion. So I think I have an image for Orion. Hold on, where is Orion? Okay, oh, I didn't put an image. So first thing first is Orion so sleek. Right? Meta, when I say sleek means from a AR, VR perspective, Orion image. It just looks like maybe, a little thicker goggles. This is what it looks like. You no longer have the big headset, etc. But again, this is not available. It's not in production. This is just for our developers. They've opened it. So it'll be maybe a year or 2 before it's available for sale. But its capabilities blew my mind. So you put this on, right? Just like you would put maybe a little thicker glasses, but this is what it all can do. Is obviously, and there was a demo being done. I think Zuckerberg was playing with a TechCrunch reporter. He was playing ping pong, right? In virtually, right? So, and this glass Orion glasses is actually tracking your hand movement, and your hand is controlling this paddle. So when the ball comes to you, you move the paddle around. There's this like yellow paddle. You do that by moving your hand in air. And so Orion was able to do that. It does a hand tracking. It does your eye tracking. The again important stuff was if you are in a public place, you're typing something, or you're trying to click, or you don't want people to see your hands waving, etc. So what they're also doing is to do a kind of a neural interface, but not implanting a chip in your brain, but this got a neural wristband that have got sensors around your wrist. And let's say if you are clicking it, maybe if you have time, you should go and see a video around it. There's think CNET has got 15-20 minutes of video. So if you're clicking it, you just pinch with your thumb. If you are scrolling up, there's a motion that you can do with your thumb and your index finger. And this wristband will be able to recognize it based on the signals passed from your brain to your thumb and your fingers. So you can be very discreet in public place and still be in your own world. Right? It's got a 70-degree field of view. So this is your own room. So this is your like a augmented reality. Now you can superimpose your work on your room, and it's got a much bigger field of view. So you don't have a tunnel vision, but you can see around also. The best stuff, which is a little scary, is it can also project holographic images. Say you're talking to your friends, your family is like 1,000 miles away. And now, if you are doing a WhatsApp call or a messenger call with your video on, you could actually see the other person's holographic image being created right in front of you. That's going to be some cool stuff. And there's a lot of tech that has gone in it. So they have these cameras all over the place and lenses all over the place. And, they use all the technology around your wave, light wave refraction to create this holographic image, which is based on the image of the person captured by the device on the other end. That image get processed with some custom silicon, and then through these glasses and through these lenses, and holographic image is being projected right in front of you. So that is the vision right now. I mean, when I was looking at the demo, I'm like, why would anyone need Apple? Maybe I will come with a better, but why would I put on the big Apple Vision Pro? And I think one product that will kill immediately is the Snap glasses. So Mark is pretty excited about what Zuckerberg is trying to focus on. And they also announced new models of Quest. I think this will eventually go away. Who would want to be, putting these big headsets and strapped on a head and hold these controllers when you can control what you see right with your fingers, with your hand, or if you want to use a hand gesture, that's fine. But I guess until then, until the Orion becomes a reality, you got a Quest 3S and Quest 3, some improvements over there. And not only, I think this is actually for the Quest. So eventually it will also go in Orion. So what they also announced is they're going to tie with Microsoft so that you can carry your work desktop into your virtual world and continue to work over there. Just like Apple has demonstrated it during the Apple Vision Pro demo, the same will be available for a Meta Quest also. So this is the one use case. Then I can, copy, right? Because it's now I will only need to have one small monitor when I'm working in a physical world, because in my virtual world, using Meta Quest, I can actually create as many monitors as I want to. Maybe I'll create two big, 40-inch monitors in my virtual world when I'm working, and then when I'm done working, I'll keep it aside, and I'm back to my desk with a small, little cute monitor at my desk. I don't have to clutter my desk with 3 monitors, 4 monitors. Those who are daytime traders, instead of 8 physical monitors, 6 physical monitors, maybe just stack those monitors in a virtual world. So that day won't be far away, where you can actually have your monitor moved into your virtual world and you can continue to do your work. So, but I'm pretty excited about Orion. Like I said, this Snap killer for sure. Unless Snap does, the Snap application itself doesn't work with other glasses other than just Snap. That may be a reason that Snap glasses may still be around. Otherwise, why would I buy Snap glasses? Could be Apple Vision Pro killer. I think too early to write because Apple is known to make the best hardware, but it does pretty much the same thing what Apple has shown us during the Apple Vision Pro demonstration. You can see the eyes of other person, so it's not like you are like a robo. On these glasses, if someone is wearing the glasses, you can see through their eyes, like over here. It's not like you're completely cut off from the real world, and that's what Apple had also mentioned. But I guess too quickly to say that is a killer. I think too quick to say that any of these products, either of these products, whether it's Apple Vision Pro or Orion, will find a use case that everyone would want to have one. Maybe niche use cases in industrial, in training segment, but you and me, would we want to have a Orion or Apple Vision Pro when I'm walking down in the market? I don't see that use case just yet. So maybe both will become failure, or one of them may take over the market if we are early in this one. But market is pretty excited. It saw a couple of upgrades coming to Meta. I think one of the firm gave a price target of 800 plus for next 12 months. This stock was $88 2 years ago. Now we're talking about 800 plus. So that's on this week I saw on Meta. Meta not only did this, but they also have implemented some guardrails in Instagram because there has been a outcry across the world. First, I saw this in Australia, where the Australian government is putting in some rules in terms of how much of a social media is allowed for vulnerable kids. And of course, China have their own rules, but even some of the Western countries, capitalist societies are trying to put a rules around regulating or, regulating the time that kids spend and what kind of a content is available to them. In my opinion, I think that's a good step. Sometimes I feel that some of these social media apps are as harmful as cigarettes have been for physical health. You can call me whatever boomer but sometimes I feel it's too much of it, and there is no control in terms of what content is shown to the minds that are still impressionable. So Meta, before the regulators cut it down, they are kind of reading those tea leaves and now implementing these changes in which the default settings for the kids will be private, means your content will be watched. Today, you can go and set your Instagram to private. Now, I don't have Insta account, but my kids tell me that that her account is private. And maybe I have no way to validate it, so don't know really. But that's why she tells me that, because she posts something sometimes my forum. Why are you putting on Insta? I said, don't worry, I only have a private, so no one else follows me other than my close friends. In any case, now the Instagram will make it the default setting as a private, right? They will reduce the amount of adult-oriented content that those kids of that age, will see in their feed. Notifications will get muted during the night time, right? So be able to focus, these are stuff matter for your mental ability and mental health. Next year, so today, your age verification is whatever you tell. You can be 12 and say, I'm 16. But let's say next year, they're actually planning to use an AI model to kind of verify your age. So you'll have to scan your face, basically bring up a camera, take a picture, maybe scan your face, move the phone around, and then the AI model will actually try to verify, are you really 16? look like 8, then they might ask you to upload a government ID or some sort of official proof. Right? They don't want to do it. Looks like they don't want to do it for everyone, because then it becomes a much bigger hassle in terms of onboarding. But they don't want to leave it completely open, which is today it is. So that I guess they're trying to use the AI to first verify the age, and then only if the model highlights looks like no, this kid doesn't look to be whatever that age claiming to be, then they'll ask for further verification. And you will receive notification to close the app after 1 hour. You can ignore it, but I somehow feel that it does work. Like on my monitor, I have a notification that it'll remind me on my computer monitor. It reminds me, hey, stand up, or do exercise after a particular amount of time. Yeah, if I'm busy, I'll just won't do it. But sometimes I'll just get up, stretch, walk a few steps, then come back and sit it. So it does help. But now coming back to this was me talking as a parent or as a concerned citizen. Let's talk about as an investor. It will reduce the engagement numbers, right? So next, if we are talking about looking next, I don't know when this implementation will be completed, whenever, then if I'm looking at a daily active usage or monthly active usage, or the number of hours spent on Meta's properties, we should see some reduction in that. And now when that happens, some of these algorithms might pick this up and sell the share, saying, oh, Meta is going to crazy, they're losing users, they're losing engagement, and it's all about engagement. All their revenues come from advertising, which means engaging with it's all about retaining the users on their platform and showing them more and more content. And if that number decreases, it might be interpreted as bad for business. But why those are being done. It's not that a competitor is eating their lunch. Maybe it's a good thing in a long-term perspective. Right. So just wanted to share that this is what Meta had announced. So won't be surprised. I won't be surprised if I see some engagement numbers going down. Now I know why it is going down. All right, so I guess let's stop right here. It's 12:15. I'll be around for another 5-10 minutes. Any questions, anything else that you had in mind? Like I said, I was kind of pretty busy this week to look around what's happening on the markets. What did I miss in the market? Any other big news? I know Chinese was one. Other big news that we should talk about, because it matters to investors, which happened this week. No, nothing else caught your eye? Maybe next week I'll bring about some data. There's a report that Morningstar has come up with, Mind the Gap. Looks like they come up with this report every year. I wasn't aware, but this year I actually got the report, which talks about the concept that I think that's why we started a discussion around is, selling high and trying to sell high and buy low. And the summary is this, that I think even last year maybe just share the numbers. Same stuff. Investors are the worst enemy of themselves. We are the worst enemy of our own portfolio, trying to tinker too much with them, trying to figure out, hey, I think I should sell now because I'm smart enough to know that the market's gonna go further down. So now we'll talk about with some numbers on it. OpenAI excess leaving was big. No, it is relevant for stock. Okay, let's talk about it. Yeah, so OpenAI, oh gosh, I'm still not able to understand what the heck that company structure is. We had the same problem earlier this year. It was a non-profit. Now they need so much money. No one will give them money if they are not for a profit. So they came up with a convoluted structure of a non-profit company controlling a for-profit division. And then everyone was like, what the heck? What kind of a creature have you created? This is with a combination of non-profit and profit. So now they looks like they're gonna carve out, either they carve out or they're gonna convert OpenAI into a for-profit corporation. Right? So no more this whole non-profit, all that stuff. So the altruistic motives of making AI good for humanity is thrown out of the door. Guys, we are here to make money, right? That's essentially the for-profit conversion is. Here my concern, whenever you do this non-profit to for-profit conversion, IRS will come behind you because you didn't pay any taxes when you were non-profit. Now, I don't know how all these things will work in terms of all stock grants and the taxes due on the grants. So it's not easy, right, to do this conversion. Number two, they gave Sam Altman 7% equity. Now the three exec have left after this conversion was announced and the Sam was given 7%. Now I don't know, maybe they left because maybe they really wanted to work only for humanity. They really wanted to work for non-profit. Or maybe they left because, gosh, it is becoming so much jumbled up. We don't even know what are we working for. Are we working for non-profit? How the implications will happen on tax and all that stuff? Or there's a case, he got 7%. What did I get? I'm also from there from a day one. What did I get? And Sam, and again, I'm not saying that Sam is like, but hey, most of the tech we built, why he is getting 7%. So there could be any reasons. Now, when coming to the stock, it is relevant to stock because Microsoft has, almost owns half of the company. And now if Microsoft has bet all its AI future on OpenAI, if with the exodus of these execs, which include chief tech officer, I guess, maybe, I don't know. I mean, there are three execs left. I only know Miramurthy, she's a CTO, but the other two have been around with OpenAI for very long time and have contributed to what OpenAI, what ChatGPT has become. So if with with these execs leaving, if that means ChatGPT won't be able to compete with others, some of them are free of cost, like Llama, right? Or with Gemini, or with Anthropic, or with Mistral, then Microsoft has got a problem at its hand. Who would pay them for the co-pilot if the model doesn't do what it's supposed to do because there was no big innovation happened because the team had a big hole, right? So that's the way we may want to look at, or could be even positive for companies like Meta, which are going behind with the open source model. Doesn't matter if, let's say, tomorrow Zuckerberg say, no, I got up from the bed and a dream that forget AI, let's go back to metaverse. At least the code is out there in open. You can use the code, and if you have a capability, contribute, and you can continue to build on top of it. So that's the beauty of open source code. So that's where we have to look through it. Too early to comment on what was the reasons, how much it impact OpenAI. But if OpenAI gets impacted, if the model gets impacted, then I do see Microsoft trying to figure out, okay, what next? Other thing, I think Apple backed out of $6.5 billion investment that they had mentioned that they will do it on OpenAI. Now they put it on hold for now, unless this whole restructuring is figured out. Prashant said Copilot has been liked by companies for corporate versions. So I'm not sure if it is liked by companies or they have no choice because they are so stuck and logged into the Windows and the Microsoft Office operating system. So what's happening with IBM? Look at IBM share has hit new all-time high. I don't own IBM. Tell me one innovative stuff IBM has done over last 5 years. Question to you, what innovative stuff has IBM done in last 5 years? Stock has hit new all-time high. It's the all-time high 52. Let's go back all the way to 10 years. Maybe it is all-time high. 224. Yeah, it is like at least last 10 years it's high, right? What has IBM done? Nothing much. I've not seen any new innovative stuff coming out of IBM. It is just riding the coattails of whatever is the new hot stuff. Now the AI, are you getting? I am now getting ads on Watson X. IBM was the first one to actually create a AI-based product called Watson, which they had then, a lot of pharma companies were using it. And this is like 10, 15 years ago. They didn't do anything beyond that. Now the rest of the world has moved on to AI. Now they're reviving the Watson X. But why? So the stock is up for a reason, right? Because their revenues are hitting high, and it's only a matter of time, because right now all those companies are still can't move away from IBM mainframes. Financial institutions still run on mainframes. They may not even have a way to migrate out of mainframes. So if IBM wants to sell whatever they're selling, and I think the biggest profit maker for IBM revenue generator is a global services, which is nothing but selling consulting. We sold you the stuff that doesn't work. Now you pay us to fix it because you can't get rid of what we sold you. This customer will jump the ship whenever any of the other platform is able to provide them a migration path. So sometimes I feel that the Windows and all that stuff is kind of locked the companies into Copilot. So the question, Microsoft did anything in the last 10 years? The Azure is a stuff that they really have come. It's not innovative in terms of that they were the first one to do, but they really executed it well. I mean, IBM also has a cloud for years. They actually bought Red Hat to do the whole virtualization and all that stuff and build the cloud. No, didn't go anywhere. Who talks about IBM cloud? If Oracle has become number 4. Who uses IBM cloud? I guess maybe those who are stuck with the mainframes because they have no choice. So, and see, I think the consulting base is up and that's helping them. Again, consulting is not a good multiple business, right? It's not a product business. The AI consultant. So that's what I'm not. Maybe the licensing model of the Copilot is such that you get a huge discount and you do that. If it is or maybe it's a good tool. I don't still find it as a good tool when I compare it with the Chat GPT versus Copilot, even though both are powered by same. I don't know why. I don't get the same answers from both of them. But if OpenAI deteriorates, then AI side, Microsoft will have issues, but they're done good on the Azure side of the world. Firefox, even they make money. Who uses Firefox now? I don't know what's the Firefox.
It's the 4th largest browser.
Yeah, but
you brought up OpenAI, so then I'm thinking, well, they're still is the 4th largest browser.
Yeah, what's the percentage? If like 90% is 80% cornered by Chrome and another, 20% cornered by Safari, and I don't know the numbers, in another remaining cornered by Bing and Microsoft's Edge. Now it's Edge. It used to be Internet Explorer. Then I don't know how much is. Bobby said by selling users data. That's how they make money. Anyway, so that was on OpenAI. What else was there any other question? No. Any other question? What other company? What do you have on your watch list? So when the markets are running all-time high, it's a good time to sit back, do some study, and prepare a watch list. Sometimes I actually close my laptop and go out. Because when the markets are all-time high, I sometimes think I'm going to make more stupid decision because I'll try to chase the market and that hurts me. Then I'll like, okay, I'm going out, go for a walk or go out. I'll read a book or take my magazines on my iPad. I'm going to go out and sit for 2 hours in a library or a cafe and then come back and like, okay, I need to go out. What other stocks you guys are watching? We'll stay for 2 more minutes. Any stocks you have on your radar? NVIDIA was peaking around 120 under the China interest drop. Do you see much upside in NVIDIA? Potential to go to 130? Depends how NVIDIA executes it. I mean, it's not super expensive from their guidance perspective. Whether it's 130 or 140, any time of a day, it's a coin toss. But NVIDIA is not super expensive right now. I mean, maybe it used to be, but not based on what the forward estimates are. Now, if those estimates doesn't pan out to be, then NVIDIA might crash. But given the guidance and the estimates that analysts have, NVIDIA doesn't look to be too expensive a company. Interesting, a list of people, entities that help Elon acquire Twitter. Okay, thank you. I'll take a note of it. But many of the banks that helped Elon acquire Twitter are now repenting, because their loans are underwater. So there was another story around the banks. Their balance sheet is being hurt by whatever they financed Elon to acquire Twitter. Any thoughts on IWM? IWM is ideally IWM should do good when the rate cuts are announced. So more and more I think about these IWM and the small case. I think these are only timely plays. Because great companies, they graduate and move out of IWM. If the company becomes good, it moves out of IWM, right? When I say good means if the market cap becomes bigger, they go out. So now what we're looking at, I think market is not, should I say market? Tom Lee has been a big bull on IWM because of Fed rate cuts. Haven't seen that yet work out. But if we get a rate cut, it is good for smaller companies. So it should benefit from that. But I'm not going too big on IWM. I used to have a much bigger allocation on IWM, but now I've realized that the great companies are anyway taken out of it. And this is always a play of, yeah, not so good company, but if the market, you get an external impetus, this is going to do good. I want to change my investing that it's not dependent always on external impetus. But I do have a position in IWM, not as big as what you used to have. Intuit, MCO, FICO. MCO is what, Moody's? Moody's and a FICO. So these are the companies with some good moat around their businesses. INTU, I think, is Intuit. So that's into it. Again, I think these companies have some good moat. So I don't think that these are the companies which will grow as a big growth companies. That's okay. But these are good businesses that generally grows at a decent pace. So it's like if you don't want too much volatility in your portfolio, you want to have companies in your portfolio that don't go as much down as, let's say, if the market goes down, but also doesn't participate in the growth also. Then yeah, at least MCO and FICO, they have a big board. Intuit, I'm a little conflicted around Intuit is because it's also dependent on a lot of small and medium business segments. Number two, there are other big businesses around the tax, TurboTax. And now there are murmurs that we are seeing, even government is creating, giving ability to taxpayers to file for free. I mean, how many times Intuit has paid to lobbyists to kill any initiative from a government to reduce the cost of tax filing because they made so much money from TurboTax. But I guess is it this year the IRS has opened up a platform for allowing taxpayers to file for free, maybe based on income, etc. But who is into it is also dependent on small businesses, because when your business is small, QuickBooks is the first pretty basic accounting software that many small businesses use. I mean, I use QuickBooks for my wife's small business. All the accounting, P&L statements, invoicing, you just use QuickBooks Essentials. But if you become a much bigger business, you start to move to other platforms. So it is also exposed to the health of a small and medium business segments, right? If we tell any institutional investors why that you are for a big market cap and a large cap company, and they say I'm using QuickBooks, they don't take it that seriously. What? But all small and medium businesses, QuickBooks is the most used software, but then it is exposed to the same risk. Costco reported results. Costco is a very durable business, but I just don't like the valuation. I mean, I'm okay to pay some high valuation, but Costco is at super high valuation, right? So it becomes an egregious. I could still be wrong, and I mean, their business. Oh, where is that? Yeah, so they have, what's their ratios? They have a great business, but paying 53% of earnings, 34 times, sorry, 53 times earnings, 34 times, 60 times free cash flow. I just can't do it. So I have no issues on the Costco's business model and how they make money. They have a great retention. They're going to increase it by another $5. Right? Well, majority of us not going to cancel our membership. They have a renewal rate of more than 90%. Right? So yeah, if you want to keep Costco on your watch list, right now it's super expensive. I can't buy that. Walmart, I haven't looked at Walmart recently. Maybe in Walmart I'll have to look at it and run through my regular criteria of looking at great business. So we can do it next week. Walmart and Target. Cool. All right. Thank you, everyone. That's it for today. Thank you for staying along. Hope you got something out of today's session. I always get, a lot of benefit talking to you guys. And next week, gonna be a 250th session. Oh, we're reaching another milestone. Either a golden, silver, what a platinum jubilee or something, if we can call it. 250th, whatever it is. It's been a fun ride for almost 4.5 years. I've been enjoying every session with you. So thank you for showing up. And I'm going to talk to you next week. Bye-bye.
Yeah, thank you so much, Vivek. Appreciate it.
So
Alrighty.
Righty. Maybe by next week I'll find where my tripod is.